Be Wealthy and Smart, episode 1617.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about the Fed holding rates steady. What does that mean, and what does that portend for the future? Well, it wasn't surprising that in the Fed's meeting today, they decided to hold interest rates exactly where they are. The central bank's Federal Open Market Committee voted to keep its key interest rate in a range between 3.5% and 3.75%. The decision put a halt to 3 consecutive quarter percentage point reductions billed as maintenance moves to guard against potential downturns in the labor market. In voting to hold the line, the committee raised its assessment of economic growth. It also eased its concerns about the labor market as compared with inflation. In the post-meeting statement, they said available indicators suggest that economic activity has been expanding at a solid pace. Job gains have remained low, and the unemployment rate has shown some signs of stabilization. Inflation remains somewhat elevated. Importantly, the statement also erased a clause indicating that the committee saw a higher risk from the threat of a weakening labor market than that of heightened inflation. That would argue for a pause on rate cuts, at least in the near term, as officials see the Fed's dual goals of low inflation and full employment more in balance. There was little way in the guidance about what's coming next, with markets expecting the Fed to wait until at least June before adjusting its benchmark rate again. Again, their statement said, in considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks, repeating language inserted in December that markets saw as a shift away from the easing cycle that began in September of 2025. Treasury yields moved higher following the decision, and the S&P hit a new all-time high of 7,000. As has been the case for recent meetings, there were dissents on this opinion. Governors Stephen Miron and Christopher Waller voted against the hold of rates, while both advocating another quarter-point cut. This was Miron's 4th consecutive dissent. However, he had previously advocated for a deeper half-point cut. Both officials were appointed by the president, with Miron filing an unexpired board seat in September 25 and Waller appointed during Trump's first term. Miron's term expires Saturday, while Waller interviewed for the Fed chair's job, but is considered a long shot. The routine nature of the decision comes at a time when nothing is routine for the central bank. Chair Jerome Powell has just 2 more meetings before his term at the helm ends, ending a tumultuous 8 years at the Fed that has included a global pandemic, a steep recession, and a seemingly endless series of battles against the president. If you look at the incoming data since the last meeting, there is clear improvement in the outlook for growth, Powell said during a news conference. Inflation performed about as expected, and some of the labor market data came in suggesting evidence of stabilization. So it's overall a stronger forecast, really. More recently, the Justice Department has subpoenaed Powell over the extensive renovations at the Fed's headquarters in Washington, D.C. Before that, the president threatened on multiple occasions to fire Powell, and in fact has moved to sack Governor Lisa Cook, a case that is now pending a decision from the U.S. Supreme Court. When asked about his decision to attend oral arguments at the High Court, Powell said the case is perhaps the most important in the Fed's 113-year history. Underscoring all of the tension has been a battle over the Fed's independence, or its ability to operate without political interference. In confirming the Justice Department probe, an unusually candid Powell attributed the threat to Trump's efforts to control monetary policy. Prior presidents also have criticized Fed decisions and tried to coerce policymakers into rate cuts, but none have been as aggressive or as public about it as the president. The Fed also has a challenging economic backdrop to navigate. Growth as measured by the widest measure, gross domestic product, has been robust. The third quarter motored ahead at a 4.4% clip, and the final 3 months of the year are tracking at a 5.4% rate, according to the Atlanta Fed. Inflation has proven more troublesome. While off its 40-year highs back in 2022, the rate is still running closer to 3% than the Fed's 2% goal, causing concern among some FOMC officials who either want rate cuts paused or eliminated until there's more evidence that price increases are easing. Futures markets are pricing in at most 2 rate reductions in 2026 and none in 2027 right now, regardless of the next Fed chair. Prediction markets are pointing to BlackRock's bond chief Rick Ryder as the likely candidate to succeed Powell. So there is a lot going on in the background with the Federal Reserve, and I want to announce that I will be in a documentary film about the Fed called Money Disrupted, brought to us by Fruition Productions, who also created the last documentary I was a part of, which was called Rigged from the Start, the SEC's War on Cryptocurrency. Money Disrupted is premiering in major theaters in Scottsdale, Houston, Boston, Washington, D.C., Atlanta, Georgia, Miami Metro, which is Coral Gables, and Los Angeles. And its big debut online is February 19th. For more information, go to fruitionproductions.com. That's FRUITIONPRODUCTIONS.com/Money Disrupted. Money Disrupted is a documentary on inflation and the future of money, and also reviews the history of the Federal Reserve and the truth about it. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.